Hey, welcome to the closing beat, everybody. Happy Wednesday. How's it going today? Getting the hang of this new YouTube layout garbage. I'm getting to that age. I don't like when people change stuff. I want it to be the same every day. Just want my things the way they are. Hey, welcome to our show. It's called The Closing Beat. Just a quick stock market update that we do for our customers here at Jazz Wealth. In addition to you guys that want to participate, I'm happy to take your questions. I usually go through everything here, and then I'll stick around and answer your questions for you. And I want to start by just saying thank you to those that have transferred your accounts or opened new accounts at Jazz. A lot of people have done that here over the last month. And for us, it's great, right? It lets us grow and keep doing cool things like this. But I know it's a lot to take a shot on someone, a small company or whatever. We are SEC registered. We do everything we can to make it be on the same playing field as the big guys, but it means a lot to us. So I appreciate it. And if you're thinking about joining us or transferring your account, well, number one, we always start with investing in our expense-free funds. You can see them right on our website. Number two, we help you with your goal. How much do you need to save in your 401k, your Roth IRA, whatever it is to get to your goal? Number three, we'll look at all your outside accounts. Like you've seen me do videos here in the past where I review someone's 401k. Really geeky. We kind of go into it. I sort of enjoy it, so we go through that. And number four, weekly classes. Always trying to teach something new. You can go into the dojo. It's kind of our financial Netflix-y looking thing. And we do classes in there. Every week there's a live one. This Thursday, actually tomorrow, we're going to talk about Social Security and some of the issues people sort of struggle with there and some problems I see going on. So we'll cover that, and I always stick around to answer questions for customers. But I didn't mean for this to be like a little marketing thing. I'm thankful. I appreciate all of you guys keeping us in mind. And if you want to check us out, jazzwealth.com. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your screen. Every Friday, we announce the person who guessed the Dow price closest without going over, and we'll send you a $100 gift card if you're closest without going over. And if you're a customer, we'll actually credit your account $100 there. So far, so good. I think we're going to continue doing this. It's sort of a pain to do, but you guys seem to have fun with it. We have a lot of guesses every week, and I'll try to get more detailed with sort of the results and the stats of all that stuff as well, if we do decide to keep going with it there. Anyways, let's talk about the stock market today. You got a nice little rally, 162 on the Dow, 18 on the S&P. The NASDAQ gained 83 on the day. The focus this morning was on impeachment, right? You got Nancy Pelosi starting the official impeachment inquiry, which overnight had everybody going, okay, what are the stats? What happened when Clinton was impeached? What happened when Nixon was impeached? Although it's a little different and we're at the starting point right now, we went over the stats yesterday to kind of share that with you. The thought was, hey, oh my God, if they're going to impeach President Trump or even go down this path, that means China can sit back and wait. They don't need a trade deal. Or it means Trump's going to have to accept a lesser deal with China because he's going to have to show, hey, things are going good and you can trust me and reelect me and all that stuff. So he may accept a deal that's not as good as what he wanted. So that was the initial focus. Then Trump was given a little conference there and said you could expect a trade deal, maybe his actual words were, could come sooner than you think. And right then the markets responded to that. That was the focus. Why? Because that's all that really matters, right? The drama of Washington and everything, it doesn't affect the stock market in the long term, and everybody knows that. We're focused on earnings growth and potential, and the trade deal, of course, if we could get that done, that puts a lot of the sort of headache and stress behind a lot of the big companies out there. So that's that focus. Otherwise, they're not going to get anything done in Washington right now. Can you imagine that? Now you got two sides fighting, even some of his own side deciding maybe they're going to go against him here. And so they're just not going to get anything else done. It's frustrating from that respect, but from the market respect, that's where we had the excitement today. There was also an initial trade agreement that we came to with Japan. That barely made headlines. It was like there for a second, and then they moved back to the impeachment talk there. So a tough one. We also had econ news come out. New home sales, they grew at a level that they haven't really grown since 2007. Now, a lot of people, you go, uh-oh, that's not good news, right? We've grown kind of quick there in 2007. We all know what happened after that. But strong growth in new home sales. So you saw new home builders do well today. But you also kind of get that conversation of, uh-oh, are we headed into a recession, right? Could that be a real possibility? And currently the stats actually from the Fed is the 31.48% chance of there being a recession in 2020. It was 32.88%, so, it's a little bit better there. But remember, every time I give you a number, you're supposed to ask me, what does that mean? Is that high? Is that low? Like 31.48% doesn't sound very high. I mean, it's not half, right? It's not a 50-50 shot yet. Is that a big deal? Actually, the number is really high, and I have a new fancy way to show it with you here, so let's go over to the charts. Here is the sum of the history of the U.S. recession Fed probability brought to you by the New York Fed. And what I did is I put the recessions in the background so you could compare what the probabilities were leading into a recession and through the recession where they spiked. What was the probability going into it? Now, to be fair, recessions aren't really, they're not really earmarked until after they happen. So it's not like you could say, oh, recession starts now. It's sort of a backward-looking metric there. But anyways, so you can see relative to history, we are very high. The average is right around 14%. So we are well above average, twice to be exact there, 100% above average. So not good, right, from a recession standpoint. If we zoom out, we can go way back here. You could see that at the beginning of the last 3 recessions, we were at or above the current level of probability that we are. Now, what does that mean for you? Are you going to do anything about that? I mean, do you care? Does it matter? By the way, the next release comes out in like 6 days for the probabilities there, so we'll try to keep you updated on that. But does it matter? I mean, for you, it means, okay, if I'm close to retirement, I need to make sure I'm positioned correctly. We've already done that for every one of our retired or very close to retired customers. If you're not, it means, okay, am I going to be buying more of the dip when we see it? Is the market even going to fall? We've gone over that. And it means that from your personal finance perspective, you may want to start getting your dough straight, right? If you've been sort of lollygagging around and spending your money, you may want to try to save up a little bit of money because there could be opportunity coming. There's a 31.5% chance that you'll be able to buy a house cheaper. You'll be able to buy cars cheaper. You know what I mean? Like there's the opportunity to do things like that. So I just want to point that out. I don't know if you care, if you want me to follow up with those sort of things. Leave me a comment. Let me know what you think, and we can kind of play with that. Let's go over to the stock market here. We're flirting with these highs. We drew a line here at the highs here. The market's still looking for that catalyst to push us above the highs. Yesterday's sort of retracement there is actually a pretty statistical significant standpoint. I say that backwards. This has actually only happened 174 other times since my birthday in 1982. So pretty significant here. The stats on that actually is that the market ends up higher 1 month, 6 months, and a year later. Doesn't mean you can't have wildness and pullbacks in the meantime, but it means that when you see this sort of bearish engulfing pattern there, it does happen. Well, it's not super rare, 174 times since 1982. I mean, yeah, it's all right, I guess. But it lets you know that all in all, things will be fine. But in the short term, you can expect a lot of sort of action and excitement there. The Russell, higher by 1% today, one of the standout areas. That's okay. We'll take it, right? The Russell 2000 has been an underperformer, currently floating inside of this range here, not really performing since February. And a lot of people look at that as a warning sign. The Russell's always the first to crack ahead of recessions. Actually, that'd be a cool class. Where's my pen? We're going to do that. Russell and recessions. Sorry to stop for just a second. We'll show the Russell 2000 before and through each recession. So I'll do that as a class. Okay, I hope I can. I'm just making these promises out of nowhere. All right, you got rates rising today. So the price of bonds retreating from yesterday's highs exactly 100%. That is what's known as a bearish 180. So yesterday, very strong move. Prices were higher, yields were lower. Today, you get an immediate 180 where yields go higher, rates go, or prices go lower. And so in the short term, that is seen as relatively bearish for the price of bonds, meaning higher yields to come. We'll see. From a technical perspective, we'll follow through with that. You got 10-year rates doing the exact same thing, retreating. You also had a steepening in the yield curve, which is very positive. If you don't like the idea of a recession or want to try to stay away from one, steepening in the yield curve definitely helps. Because of the trade news today, all of the trade-sensitive areas, consumer discretionary, things like that, did well. Here's consumer discretionary. I drew some lines just to show that it's kind of in the middle of no man's land right now. There is no good reason to buy or sell consumer discretionary stocks, kind of like the stock market. There's no great reason to dive in right here or to pull off all your money and scale back. We're sort of floating in between uptrends, well, support and resistance in the uptrends there. So trade sensitive is the moral of the story. It did well today. Semiconductors, nice little reversal there today, almost a 2% gain. Still kind of floating around by the 50-day moving average. If you follow tech stocks, XLK, you can use that as well. That is officially bouncing off of its trend line there. So if we put that intact. We've been following this trend line for a while. We'll stretch it out even further. For the moment, that acts as your support. Any price movement below that closes below or pushes aggressively below on high volume throughout the day would be seen as sort of the end of that uptrend. A lot of people are going to watch this now because you have a lower high. So if you're a technical trader, what do you have? Higher high, really strong pullback. You got a new high, pullback, no big deal. and all of a sudden a lower high. So if you're marking off these highs, that shows that the tech stocks couldn't continue their impressive rally. So a lot of people are going to be looking at this high right here. In fact, I'll draw another little line for you. Making a lot of promises today, but we're going to follow through with this as well. That's the best I can do right now. So a lot of people are going to be looking at it to break this sort of lower high potential start to a downtrend. It's too early to tell. Otherwise, support to the downside. If that breaks, you expect more weakness on the XLK. That's if you're a technical trader. If you're a fundamental person, then you're laughing at me right now. You're like, what this guy hocus pocus stuff he's doing. Price of gold lower today. Sharp reversal in the price of gold. We'll look at the gold futures contracts directly. You can see an immediate reversal. Still, you could say sloppy near highs. No reason to bail out and run for the hills just yet. The 50-day moving average will be your main focus there if you're paying attention. Silver also retreating very aggressively, giving back all of its gains for the week, turning negative. Still, you can make the argument here, all right, a little extended in the short term. When things get extended, you experience more volatility. Could be the stock market, could be any stock you're playing. When it gets extended to the downside or the upside, you get volatility. Netflix would be a great example. We'll cover that in just a moment. So anyways, things like that or related to gold or silver, like your gold miners, also had a weak day on the day there as well. Dollar very strong today, but to be fair, a lot of that was weak euro and weak pound overnight. So if you're a Forex trader, you got a reason to, well, you had a lot of activity there, so you're probably pretty busy and maybe not watching because you're sleeping. So there you go. You got crude oil sort of solidifying itself around the 200-day with all the focus off of the idea of this, trade, right? When you can say, oh, well, it sounds like a deal may be coming sooner than we think, the focus turns back to supply and demand. And so there you go. You had a wild day in the price of oil, just floating around the 200-day for the moment. Technical traders seem to be respecting that. Also, the little breakout downtrend area there that we've been highlighting. Sloppy, sloppy, sloppy. If you play in oil lately, you're probably getting a little bit chopped up in there. Keep playing the game. All right, stock news, let's go into it here. Philip Morris and Altria calling off their deal to merge. So you got a lot of volatility in those two names. These two companies have decided they're going to focus on the IQOS. I don't know if that's how you say it, but the IQOS, which is just tobacco that you heat up in an electric device. So rather than taking a tobacco leaf and burning it the old-fashioned way, I don't know if it even comes pre-made inside the little vaping-looking things, but it's heated up. It's not actually burned. And so because of that, it's, hey, it's something that's actually possible here. And wouldn't you know it, there's a lot of data coming out that shows that this product is not actually appealing to the youth. So pretty clever, huh? We squash the vaping world and just demolish everything that they've done there, but all of a sudden there's a product here that we have to replace it from big tobacco. Huh, clever timing, don't you think? Very smart timing. And the Juul CPO, he stepped down also. Don't blame him. He's probably like, I'm out. Cash my options in. I'll move on. Marathon Petroleum is going to be one of your bigger gains today. This is in the oil and gas space, but it's not higher because of oil and gas. Elliott Management, active hedge fund there, they want to split this company into three companies. They want to put Speedway in one category, their midstream pipeline in one category, and then Marathon in its own category, and have them be three separate different companies. Apparently, the company agreed to this a while back, but they didn't take any action, and so Elliott Management, which owns a whole whopping 2.5% of the stock, is now saying, we're going to push for this, right? We're going to actively push you guys to do what you said you were going to do. We'll see what happens. Nike breaking a new highs. We covered this yesterday on earnings, breaking above this sort of range here after coiling up in the short term. Very strong day for that one, about 4%. They beat on earnings. Their whole focus on going digital straight to the consumer is actually paying off, and the CEO was rather positive about things going forward. Stock basically held up today and did okay. Harley-Davidson, I don't get to say this often, decent day for Harley-Davidson, up 3% on the day. They have this initiative going on, it's called, gosh, you can't remember everything, can you, Dustin? More roads lead to Harley-Davidson, something like that. They've named it something special like that. Anyway, so they were talking about this, and a lot of analysts' preliminary results were, we like it, things are good, this is going to help Harley-Davidson. No real numbers or anything real geeky I can give you at the moment, but maybe the tide turning there with Harley-Davidson would be nice. They've been beaten down for a while. NVIDIA, 3.3% higher today. Analysts went to 192. Now, this was kind of like they had to do this because they were at 179, so the stock was already around their price target. They went to 192, said it'll make it back to these prior highs here. The analyst was at Goldman Sachs, very good analyst, by the way. So he's just basically saying in the short term, we're going to head back up to these highs here. There's actually 20 buy ratings, 5 holds, and 2 sells. The average price target is 188.32, which puts you really at these prior highs here. And so that's about 9% higher than where it finished today, if you're interested in that. All right, stock-wise, let's do the geeky stuff. 67.3% of the S&P is above the 50-day moving average. What happened? We were at 62% yesterday. That's weird. It wasn't that big of a day. How did we jump so much? We went from 70% all the way down to 62% because we lost the oil names yesterday. And then all of a sudden, we just bounced right back up to 67%. If you follow along day by day, I always point this out. The change in the stocks above the 50-day moving average. Because why? Because it makes you go, something's going on. Where? What's happening? Do I need to be a part of that? Do I want to actively be a part of what, if you guys are traders, you want to be able to hone in on stuff. And this is a great way to do that. Yesterday, you obviously quickly noticed that the oil stocks gave up everything. Today, you would actually, this would be bad. You really wouldn't have a whole lot to go on because what's happening here is there's so many stocks hovering right around the 50-day moving average that one day they're above, the next day they're below. One day they're above, next day they're below.
Before you go watch one of our other great videos,
what did I just do?
Have you had a chance to see our new fin
no
tips
idea what
video?
I just did there. Okay, we're back. I was pressing buttons. Come on, man. All right, Hershey. Nope. Try it again. Hershey, so right here, right? Flirting around, the blue line is the 50-day moving average. Above, below, today back below. So we lost that one there. If you look at a lot, I wrote down a whole bunch of them here now. Royal Caribbean, right? Traded below, now trading back above. So we gained Royal Caribbean back on the list. E-Trade, you look at that one, back above the 50-day, just by a touch, actually. Kimberly-Clark, I believe, also above the 50-day. So you see what we got going on? You got a lot of price consolidation around the 50-day, which means that that number is going to actually be sort of oscillating around for the next couple days until we make up our minds here, which means we could very quickly be over 70% or under 60%. What do you do with that information? You go look at the stocks that are furthest above the 50-day or furthest below the 50-day if you have the ability to search for that, and that helps you find either your counter trend trades or your extended trades that maybe you own in your portfolio and maybe you want to take a little off, take a little profit there. Totally up to you. Many of the names are in the financial space because they're getting the groove on here. So we got Goldman Sachs back above the 50-day after being below that yesterday, so that's helping. Aflac back above the 50-day there as well. Lowe's, not the home improvement store. Lowe's, the insurance company, above the 50-day as well, but very close. So you got all these that could just very easily be above or below. Point out a few more here. MetLife, floating right in that area, and Equifax just teasing every day, above, below, above, below, above, below. So hope that helps. Just something interesting to share with you there. There were 9 52-week highs today. Nike, of course, being one of them. We talked about earnings there. Of course, that poking a new 52-week highs. You had 2 semiconductor stocks. That's good news. Those are waking back up again. Obviously, we talked about semiconductors having a good day. KLA 10 Core, or CLAC, 2.6%. And I believe Lam Research was the other, 2.43% as well after just kind of floating at those highs there as well. You also had KB Homes hitting highs. That's going to be on the new home sales numbers that came out. In fact, if you look at the XHB, which is the Home Builders ETF, to be fair, have you ever looked at the Home Builders ETF? It's not actually filled with home builders. A little interesting there. We're gonna do something on this one soon. But anyways, you got home builders with a strong day today, so you can imagine those doing well. There were no 52-week lows on the day, by the way. FedEx reversing sharply off the lows. I don't know that I'm confident that's a significant bottom there. You may be within a range. If I could do a old Kramer comment and say we're within 10% of a range, you kind of feel that way, but I don't know that that's the ultimate bottom there. It just feels a little odd to me. Netflix is one of our stats plays we're keeping track of. Look at what happened. It made it all the way back to where it's supposed to, not hitting the official stats just yet, but that reversal today, very helpful. It's like somebody else knows what the stats are. That's crazy. So anyways, if you're not following here, from this green line, we're expecting over the next 3 days now that it gains 1.88%. There's a 67% chance that that happens, and today's reversal helps offset all of yesterday. We only need 1.8% more, and well, basically 1.9% more because it didn't actually get there. And that'll be the end of that one. So we'll keep track of that, like doing the stats things. If you're following us for the first time, I just like throwing out these stats because it's not my opinion. It's just historical statistics. So I can't get in any trouble. So I'm not allowed to, I'm not allowed to suggest stocks there. Some of the stocks we own here with news, you got Exelon Corporation doing a $20 million climate fund. I thought that was interesting. That would have hurt the stock, the fact that they're putting money aside like that. But the stock was higher. That to me leads to me to feel like we'll be good in the short term there for more of a bounce. Baidu was in the news. I thought this was interesting, actually. It gained 5.3% today. They got a license in China to test self-driving commercial buses. So I don't know. Would you get on that bus? It was just like one province in China. They get to test these buses out. I'm not sure how they picked that one, but the stock was higher on that news. General Motors a little bit higher on the day, but really Amazon will be the focus here. Amazon gaining a little bit. One of the products that Amazon is getting is they're getting Alexa into GM vehicles, assuming that they actually get back and off strike and making vehicles. The first half of 2020, they're going to get Alexa into some of these vehicles there. So good news for the partnership there. Probably bad news for anybody else that was trying to compete there. Amazon, by the way, is already up on the screen. They launched like a ton of products today. Echo everything. Remember when it was like iPhone, iMaps, Echo everything for Amazon. You got the Echo earbuds, which seem to get a lot of attention because they're wireless there. And, where'd Dustin go? Where did Dustin go there, huh? Let's see if we can slide this over here. Yeah, sorry. Let me, I click the same thing every day. If I click one thing off, man, that's the end of the day right there. Anyways, you got Echo earbuds, cheap by the way. New Echo Studio, Echo Dot, Echo Flex, and an Echo Loop, which is a ring that you wear and you get to talk to Alexa and then listen from that. They're also doing something called Echo Sidewalk. I can't keep up with all this stuff. Echo Sidewalk, which is sort of an extension of your Wi-Fi. It's supposed to really extend it, like down the street. So if you're walking around, coming home or whatever, you'd be able to start using their products, like the Amazon oven that somehow you scan, like if you get like a lean cuisine or something, and on the back of one of those frozen foods it says microwave for 4.5 minutes on high or whatever. So supposedly you can just scan it and throw it in there. Are we that hard up that we can't go 4 on the microwave and just let it cook for 4 minutes? Anyways, and they're giving away something. If you buy the Amazon microwave oven thing, they're giving you one of the Echo Dots or something like that. We'll see. To me, it was one of those, hey, let's announce as many things as we can and see what takes off, because Christmas is coming up and maybe people will spend more money than they have on stuff they really don't need. It'll happen. It'll happen there. All right, what else? We got WeWork says, yeah, we'll do the IPO thing next year sometime. We talked about that yesterday. They're going to do a whole brand imaging thing. Look for WeWork commercials. Look for the CEO to be on the WeWork commercials all over financial media. Let him build a reputation for a little while, and then they'll go public with this new guy at the helm who's supposedly great, and everything will be fine. Exact replica of Uber. I mean, you could just see it happening there. Tomorrow, we got GDP numbers coming out. That might be a market mover. We'll see. Estimates basically at 2%. Pending home sales coming out to follow up with today's home sales. ConAgra reporting earnings tomorrow. 39 cents is expected, 39 cents. Micron Technologies, that'll be big for the semiconductor space, reporting in 48 cents. And do you like skiing? Vail Mountain Resorts, which is actually MTN is the symbol, expected to lose 2.5 cents a share, 2.56 cents a share because it's not snowing yet. So we'll see what happens there. You have, again, 5 Fed members speaking tomorrow. That's not normal, right? Yet today we had 4 Fed members speaking. Tomorrow we got 5 speaking. Why is that, right? Remember last time we did this? We said, why is there so many Fed members speaking? Pushing the idea of them raising rates? What's going on? I'm not saying they're going to raise rates, of course. I'm just saying 5 Fed members speaking. Look for a common tone in there to see if there's something that they're trying to get us prepared for there. We'll see. And if you haven't followed it yet, AT&T says, or Wall Street Journal says AT&T has no plans to sell the DirecTV unit. That was just kind of rumored news earlier in the week that I thought I'd follow up with there. Holy cow, we did it. We did it. Knocked it out. Ricardo says, man, this is a fake. This market bounce today is a fake. Sorry, the new chat thing inside of YouTube here it just goes at its own speed. I can tell that these, like the comments just go comment, 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 comment. So I can just see it scrolling by. D nice, why some YouTubers never answer their comment section. I answer it every day, by the way. If you have a question, post it like now so I can see it, because I don't see them along the way. But yeah, happy to do it. Just looking forward to next week. Yeah, we'll see. It's just a push-pull of the market. Yeah, now keep in mind where we're at. So where we're at in the S&P is that's a great way to say it. We're in a little bit of a push and pull area. Sideways consolidation, back and forth, tight consolidation, whatever you want to say. A sort of less fancy way to say it would be to say push and pull, right? You got it. I love it. Back and forth. Yep. Harry, USMCA won't get ratified by Congress. Was it? Nothing. Won't be no impact at all. There's currently no impact. That's old news, by the way. Isn't that like 2 days old? 3 days old? What day is it? Wednesday? What do we think of Bristol Myers? What are you doing with it? So these are tough for me to answer. I like answering questions about stocks, but what are you doing with it? Because otherwise I have to answer and try to guess what's best for you, or not what's best for you, but what you're trying to do with it. If you own the stock, you are happy. There's no reason to do anything with it. If you're thinking about buying the stock, there's no hurry, right? You've had a nice little run here off highs. You actually want to see some weakness in the market and see BMY not budge. That'd be ideal. If you're thinking, hey, I'd like to buy this stock, and the markets fall for a little bit, but you notice BMY barely moves at all, relative strength, and then you can get excited about it. But it's a tough one for me to answer, because I don't know if you own it, want to own it, short term, long term. So if you could be a little bit more specific. Have you done a video on Forex and how currency pairs work? Absolutely not, and I never will. I hate Forex. I love the stock market. I love futures. I love options. I love everything that I could do with the econ numbers and everything. I despise Forex. I've only met one person. I used to live next to the guy who he was the guy that set up, he was an older guy, set up the original Morgan Stanley trade desk for Forex. Only guy I ever met that made money trading Forex. I'm jaded, you can tell, so I don't focus on Forex. You want to keep your shares of Boeing, the S&P, Facebook during a recession, then average down the share prices? Well, it depends on how long you have. Yeah, if they're long-term investments there, you have big names, right? They're going to experience weakness. Obviously, the SPY is going to fall. But if you have no immediate need for the money there, you got good names, right? You soak up a little dividend there. By then, it'll be over 2% on the SPY. You got Boeing paying the dividend as well. Facebook, I don't know if it's all that. But yeah, I have no problem with averaging down. Now, if you're like, yeah, look, I need this money in a year or something, or I'm trying to make some income off of my trades here, different story, of course. Yeah, good. What is with this thing? I'm so sorry if it skips over any questions there. Andres, I'm going to just start here. Post question again if you have it. I'm sorry. I will answer. But what was the bottom for Netflix? I'm late to the stream. What was the bottom for Netflix? Well, yesterday was at least as of now, was the bottom. Do you mean where do we need it to be for our stats? I drew the line there, so we basically made it right back to even today. So we need another 1.8% from there, if that's what you're thinking. Thoughts on GE in the long term? I still think there's no hurry on this one. I know a lot of people want to buy a discount here. They're still working. They're going to do just fine. Everything will be fine. But I don't think there's any hurry, and you can actually see it, right? There's nobody in a hurry to buy this stock. So I like the idea of the buying dips on this one because it's so cheap. It's not that big of a deal. But you just don't see people rushing to the stock to buy it, and I think I would take the same approach. Yep. Straddle option for Micron earnings. Selling it? You thinking about selling it? Actually, I can't see it here. Where would we go? At 49.50. Micron is tomorrow, right? Yeah, Micron's tomorrow. Expected move. If you're selling it, not bad. 330 expected move. What are you collecting at least as of now? You got 360 you're collecting. I wouldn't buy it. Absolutely not. Nope. What caused the big downturn in the market around October last year? Are we setting up for that again? It feels like that. Yeah, I hope that doesn't happen again. That was very, very rare, by the way. We covered that for customers. We did a whole thing on it, like how often that happens. We have not had a 20% pullback. We haven't had a 10% pullback, I'm sorry, this year yet. So we're getting into that time where it's like, okay, statistically we have them. There's no guessing. We just have them. We got close there before. How far did we get? 7%? But that's not going to cut it. Let me see if I can see real quick. Show me here. 8.4%. That ain't going to do. Yeah, so, I mean, it sure feels like that. I kind of hope that happens earlier. Like I've been saying, I hope we pull back earlier and we can have that sort of Christmas time rally. We sort of got it last year, but it bled into the beginning of this year. So we'll see. You're looking for a video when we're talking about investing when the market goes sideways. I don't recall doing one of those. I've done breakouts and breakdowns before, which may be what you're thinking about. Yeah, that could be. Yeah, so Wow's got the right idea, right? I mean, long-term you'll be fine on GE. It's just, if you're a long-term investor, of course you want the best return and all that stuff. But you also don't want to put money somewhere that nobody's interested at the moment. Because wouldn't you be better off taking risk with something else versus letting your money sit idle? I feel that way. So to me, if you're going to invest in something, you want to see some signs of growth, some signs of a turning in the corner. You almost want to see people take the first step and dive in for you, and then you wait for it to pull back. That's where I sort of jump off right there. Yeah. Update on Roku. Roku won't be quickly rising again. So if you're looking to buy that stock, you don't have any immediate need to dive in. Short-term traders have a field day with this. You could see them playing back and forth inside of it. But this is not going to just turn around and head back to 170 anytime soon. I mean, you're talking months and months and months of this grinding, if it even gets back up there this year. Yep. Thoughts on straddle options for Micron's earnings? Covered that. Just covered that a minute ago. Seller, not a buyer. Looks like you have a small advantage as the seller if you're willing to take that risk. As a buyer, nope, you're paying way too much. Way too much. Especially if you're looking at this week's options there, which you should be if you're thinking about playing earnings. Only this week's options. Thoughts on Lulu? What was the question? Lulu for the short term. Yeah, nice and steady, right? So here's a stock that despite the market chopping around, having some scary days and stuff, this stock's basically just chugging along. You got no real reason to believe it breaks down. I mean, I guess it could, but you have no real reason to believe that. Steady as she goes for now. You got a good trending stock there. Not bad. Not bad. All right, I believe I have answered your questions. I appreciate it. I'm so sorry for the way this thing does this. Tomorrow, I know how I'll fix it. I'll pull up the screen sooner. The chat on this new YouTube thing, it only starts to show when I bring the screen to the front. So I'll just bring it to the front tomorrow so I don't miss anything. Adjusting here. They changed everything. So enjoy it. We will see you tomorrow. I'm 99% sure tomorrow's FinTips video will be a little bit longer. We're going to do the Dave Ramsey 4 mutual funds, and we're actually going to show all the data behind them. We're going to go through every single mutual fund on the planet. I'm going to show you how we go through every mutual fund on the planet. I want to just try to get people talking about that. I don't mean to bash anybody. I'm certainly not going to make it like a, take them down kind of a thing. I want to prove them right. So, but I want to show how we do it. And I want this to be something that we expand on. So I'll share everything that we've done so far, then we're going to keep it. And as we find more ways to be more detailed with the results, we'll just keep following up with it. Let's see if we can really get something good out of this, because, I mean, you can't help but cheer for anybody who helps motivate people to save money. But I know he gets questioned a lot on his investments. So I want to kind of share all that with you now that we can. And we'll dive into it then. So look for that tomorrow, and have a great rest of your day. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.